Singapore real estate is indeed one of the most priciest compared to a lot of different cities and countries in the world. Every segment seems to be increased by 4 to 5% on HDB, condos and landed, but on the ground, it doesn't work that way. My loan was $1 million. If I would have sold it back then, I can unlock $1 million of cash. But 1 year later, because of the nationwide collapse in real estate pricing, that 1 million has dipped to 500,000 and I instantly feel poorer overnight. Importantly, I want to look at the strength from a macro point of view because we want to understand the psychology of the people holding on to real estate in Singapore, and this is very essential. Alright, so welcome back to NOTG. Today, let's answer this question that whether our Singapore real estate is overpriced. Naturally, if you look at all the comparisons in the world, Singapore real estate is indeed one of the most priciest, having the most premium compared to a lot of different cities and countries in the world. One of the key rationale, of course, is because we are one of the top tier choices of a lot of high net worth individuals, and we are so small, we are just an island, we have so limited supply of residential properties, and we are one of the global financial hubs, safest city in the world, one of the best airports, one of the cleanest top schools are here, education system, good governance, security, healthcare. I think it's like if you rank every single thing. And I think this is not like new news. You just need to Google Singapore compared to other countries. I think this ranks, the ranking has a rationale and reason. Let's have a look at property prices and of course property volume. Now, this is a very good chart to look at. I think when you look at pricing, the next thing is to look at volume, but let me just go to pricing first, all right? Our quarterly price index from 2002 all the way to 2025. During this entire season, we have 16 rounds of cooling measures. Pricing after COVID for the last 5 years has been consistently going up. There was a jut in 2021, 2, 3. 2024, after the rate hikes, basically now we are entering the rate cut season. Price growth is quite, I think, like on average about 5%, but on the ground it doesn't work like that. So on the average, as an average basket, every segment seems to be increased by 4 to 5% on HDB, condos and landed, but on the ground it doesn't work that way. Because why? For example, if you look at landed properties, 5 years ago you can still get an inter-terrace for 2.8 million. Now you can only get an inter-terrace for at least $4.5 million. That jump in and of itself is close to 80%. If you divide by 5 years, that's about 16% per year. It's not 5% per year. So it doesn't work like this on the ground because we have to segmentize the basket of each type of asset, property type within the segment. So let's say landed property, inter-terrace, this district, semi-D, this district. You have to look at per basket. Even for condominiums, some properties in the last 5 years, they have stagnated. So of course, sometimes you will think, hey Melvin, but for the last 5 years, as long as I buy anything, because of COVID recovery, because of QE, because of very low interest rate in the initial recovery years, 2020, 21, 22, all properties enjoy uptrend in Singapore. Not so, because there are properties like this. 2.1 until 2.5, it went further downtrend. There are properties like this. It was plateauing, it was flat. There was properties like this. Basically, going towards downtrend. All right, so it's not a guarantee that all types of properties that you touch, you can see uptrend cycle. So to answer this question, why do I want to talk about the uptrend and downtrend cycle is because of the fact that everybody thought that if you were to go into any form of real estate, you will definitely see appreciation over the last 5 years, but not so. You need to pick your winners and the losers. You need to segmentize based on micro analysis point of view, but today we're going to talk more about macro point of view on Singapore real estate pricing, because I think the key concern is that let's say if I want to enter into real estate today in the year 2025 Q4, is Singapore real estate overpriced? Are there still opportunities? It doesn't even make sense. Will I have capital kind of stagnation effect if let's say I enter a property now, 5 years later, does this valuation stagnate, which means that my capital is stagnating, it's not working hard for me. I have capital holding costs, or in terms of opportunity cost, that I could have just bought something else, all right, and or I should have just invested elsewhere to get a gain and yield. Does it mean that, you know, if I enter into real estate now, there's no chance of growth in terms of capital appreciation, right? Because there are also holding costs of property, your property tax, MCST, your buyer stamp duty, your exit costs, you have to pay a broker to sell the place. All these are costs involved in real estate investment. So importantly is that we want to look at a macro point of view in terms of the strength of Singapore real estate pricing and what is the demographics mindset of the people holding on to the properties right now. Importantly, I want to look at the strength from a macro point of view, because we want to understand the psychology of the people holding on to real estate in Singapore. And this is very essential because the real estate valuation pricing of the entire country is extremely important. I'll give an example. Let's say in certain country, the moment there's a nationwide collapse in real estate pricing, instantaneously overnight, everybody feels poorer. The motivation of everybody that has put their wealth in the real estate becomes a low morale kind of feeling, and everybody feels poorer overnight. Because, for example, let's say your property is worth $2 million right now. You have, let's say you're sitting on a mortgage of $1 million. And then tomorrow when you wake up, or maybe 1 year later, the valuation dipped from $2 million to $1.5 million. Instantly, you feel that, hey, I'm supposed to have a lock-in profit and my equity was $1 million, my loan was $1 million. If I would have sold it back then, I can unlock $1 million of cash. But 1 year later, because of the nationwide collapse in real estate pricing, that 1 million has dipped to 500,000, and I instantly feel poorer overnight. The feeling of this affects the so-called like the motivation of the citizens holding on to properties over there. The property owners' morale drops because in the whole global concept, a lot of people put their wealth in both equities and real estate. They put in both, and naturally speaking, once real estate prices collapse or it drops, it affects the overall momentum of the country moving forward. So importantly, we want to understand where we are right now. This is the graph from 2002 to 2025. We are on that same uptrend of very gradual growth of about 5% per year. I want to bring your attention to this as well, because most importantly is that we want to look at the volume of each type of residential property. So residential properties are the bedrock of Singapore. Everybody needs a home. You either own or you rent, but majority of people own properties. 9 out of 10 Singaporeans, they own properties in Singapore. This is a fundamental. And then if you look at 2025, the 2 quarters that has passed. Now, of course, there's 3 quarters, but we don't have the data at this point in time. Let's just have a look at 2025 Q1. All right, there's 6,300 HDB resale transactions. Subsale means that, but subsale data is a bit wonky. All right, subsale means that they are still under construction, and then the first owner that bought a new launch sell to a second owner, and it's not TOP yet. But sometimes upon TOP, the data has not switched yet. They still consider that sale as sub-sale. So because they have not reached the CSC stage. So sometimes that is a bit wonky because it could also mean a TOP transaction, right? New launch, 4,152 sale in Q1 of this year. Q2 was 1,354. Q3 will be much higher, right, when the data come out because of all these latest launches. Resale, 3,479. And then landed was 4,888. So actually, if you look at Q1, there's more new sale compared to resale. Q2, more resale compared to new sale. And then, of course, landed has been pretty consistent at about 500 kind of transactions. And that has been pretty consistent for the last 2024 as well. HGB has been pretty consistent also. So when we look at this and we project on a year-to-year basis, basically we will likely end the year. Let's come to this screen. With this amount of transactions, so HDB, if per quarter is about 6,005 times 4, that will lead us to 6 times 4, 24, 26,000 transactions, which is quite the average for HDB level of transaction volume. Resale, compared to new ones, usually, so for resale is averaging about 3,000 plus. We should be ending for resale condos maybe in the range of about 14,000 transactions. And then of course for new launch condos, because that is also determined by the amount of launches per quarter, maybe 4, 8, 12, maybe we'll end up with maybe about 12,000 transactions plus minus. Now, new versus resale, they are usually quite on par, but usually resale occupies about 60% of the transactions on a year-to-year basis. New is about 40% because new is also dependent on inventory, and of course everybody have different preferences. Some buyers hunt for value in resale, some hunt for value in new, some wants to buy resale to rent out immediately and stay immediately. Some prefer to go for progressive payment and they want a brand new product. So there's always two different school of thoughts, and some owners have one resale and one new launch. There's different strategies to do so. And then landed properties, we go in with, let's say, about 500 per quarter. We'll end up with about 2,000 this year, which is pretty high because averagely is doing at about 1,600 to 2,000 transactions per annum. So this year, we are going to see maybe a repeat telecast compared to last year, but I think this year we have more transactions than 2024 because everybody is very excited about Q4 now that you are seeing interest rate at about 1.55%. Let me just have an update of the latest interest rates for you. It's at this range now. Very attractive. The last webinar we did was still 1.75, but now once Fed announced a 25% basis point, you can already get about 1.55% fixed package lock-in 2 years on average. Some audience in our NOTG asked me whether they should refinance now. There's still 2 more rounds of possible rate cuts in closing into December. Maybe you can wait for that, all right? But that means if they were to cut by another 25 or 50 basis points, we can see perhaps 1.25%, very likely. So you might want to wait a little bit, but don't wait too long because if you're still paying 3%, you're paying more interest. So maybe give yourself another 2 to 3 months and then see what happens then. But anyway, I think this rate is already very good. All right. So coming to this, basically, when we look back at this chart, what it also tells us is that the volume is still very healthy. Most of the buyers, they are Singaporean buyers, but the volume is still very healthy. We want to look at the interest rate movement as well. So interest rate, basically now we're entering into the season of green bar, which is where interest rates are going downtrend. Usually that fuel a lot of buying power, FOMO effect, and we call it the seller's market. All right, you can refer back to our previous episode. And we are forecasting that the movement towards 2026 is going to be very strong. 2026 is going to be a bullish year. Now we are already starting to see a lot of lender owners starting to pull back their listing because they are wanting to relaunch at a higher price. So if you have not bought into a landed property yet, especially for landed property because the supply is so scarce, the amount of listing is not a lot, especially at the base level, 4 over million, 5 over million, $6 million, you should quickly take action ASAP. My personal forecast is that the price is going to move up even faster. When I look at some of the key trends, there is a lot more interest now in private properties. If you look at the amount of percentage of people holding on to public apartments, it has already dipped below 80%. It's now about 77%. The 23% of people are holding on to private property. So it's very different from the past, whereby more people hold on to the HDB. Now, basically more people hold on to their private properties. And of course, when we look at the median age, all right, this is only data up to the year 2023. There are now more and more and increasing and a drop in median age of people between 26 to 35 years old buying new properties. So basically in terms of people buying new properties, the age has become younger. Perhaps it's also because there's a new so-called like renewed interest, or I wouldn't say renew, I would say that maybe buyers are very savvy now. They know that they want to go straight into private properties. So maybe their first property, straight away, they want to go into a new development. There's also this very interesting data that I want to share with you, which is the profitability of condominiums sold by number of years held after launch. So this was just fresh from the oven because sometimes people will ask like, should I sell my property at the 4-year mark, at the 6-year mark, 8-year mark, or what should I do? Of course, naturally speaking, if you hold on to your properties for 20 years, definitely you will not lose any money, right? Because naturally speaking, through time, based on inflation approach, everything rise in value, all right? The chicken rice today is not going to cost the same $5.50 now. 20 years later, it's going to cost maybe $35, example. Naturally, the longer you hold, the chance of you losing money is very low. But then if you look at the sale between 1 to 2 years of holding period all the way up to about 15, 16 years, there are always people that sold at a profit, the green bar, and selling at a loss, because it is very determinant based on your entry point, whether are you disrupted by a cooling measure or not. For example, if I were to come to this screen, now there's a few periods, 2013, and then now we are at an injunction point of 2024. This is pertaining to condominiums, non-landed private properties. 2013, there was TDSR. This was a big change in the way that developers crafted their unit sizes. All right, 2024 is the harmonization of units. This is a two very important milestone pivot point, because in 2013, developers, once they note the impact of TDSR to the market, affordability of every home buyer dropped in terms of their loan size. Instantaneously, they switch, let's say the two-bedder from 1,000 square feet to immediately at about 700 square feet on average. Three-bedders was about 1,003. Then you start to see 900 plus to 1,000 square feet on average for three-bedders. All right, so there was a switch towards quantum play. So this became a quantum era. Before that, every investor was talking about PSF and PSF. Now it's all about quantum. This switch in 2024 is even more impactful, because now you start to see 600 plus, although you already started to see 600 plus beforehand, but then now it's even more distinct. For three bedders, you are seeing 700 plus to 900 plus. And the harmonization impact is not that big. It's just basically some reduction of AC latch and all that. But then this is now a post-harmonization era, which further even emphasize on quantum. Now, my personal projection is that as we go into 2030, once we hit a new PSF level, that maybe the OCR is above $3,000, all right, or PSF example. So OCR now is still 2,000 plus over dollars. The only way to calibrate quantum play, because we still have TDSR, I don't think the government will ever remove this. This is a very important thing that they need to make sure affordability remains in check, and then we don't over leverage as Singaporeans buyers. The only way is for size to go down. And for size to go down, maybe we'll start to see two bedders, 400 plus to 500 plus square feet, three bedders, maybe 600 plus square feet to 700 plus square feet. That might be a norm. That means we are going towards the Hong Kong route. So that's the only way to control affordability, and is for really all the architects and developers to really see how to make the layout in a way that they can still play around the size. That's my own personal forecast. But coming back to this, that there's no clear formula in terms of hunting for properties that will guarantee a gain, because there's strategies on the ground. That's why we always talk about trifecta, disparity effect, hunting for the gap, hunting for opportunity gap. And we have various different formulas. In fact, we have close to 11 to 18 different investment methodologies to hunt for the winners. Because it doesn't mean that somebody says that you buy property, you sure see profitability. It's not guaranteed, all right? You need to hunt for the winners. There are always losers that you want to avoid. So if you want to save yourself, two things. If you want to save yourself capital stagnation, you want to save yourself and not having the chance to see 200, 300, 400K profit for a holding horizon of 4 to 5 years, then of course you can choose to have a chat with us. Look at our methodologies. We have close to 11 to 18 different investment methodologies, just to have a glimpse of what it looks like. In fact, we always think about the new innovative kind of investment methodologies to see how do we keep pace with the trending. So this is an example of how we look like. We have 11 frameworks, 12 investment methodologies, now is about 18. And then we look at the objective in terms of freedom and choice, how to funnel your active income into asset income to create passive income from 55 years onwards. All right, 55 years old onwards. We believe there's a winter season that you should start creating more passive income. But you can only do that in your spring and summer season and autumn season, that you funnel your active income to build your asset income, because that is going to help you with your passive income in future. Coming back to the last part, which is the last chart for this episode, I want to share with you about this concept. Is Singapore residential market volume by total transaction value in the last 23 years. If you look at this, the back-end psychology is to think about how would you think if you are so-called like setting policies for the nation, all right? Because when you look at everybody's wealth, and this is all locked into the transaction value of real estate, not everything, I'm just saying that majority, everybody, 9 out of 10 people own properties in Singapore, and just by everybody owning one property on average, if you look at the year 2024, beforehand, it seems that close to 70% of the wealth are locked into private housing, all right? And then you have about 25% being locked into public housing. Now, if you have majority of your wealth that is locked in private and public housing, naturally, you do not want the prices to collapse. You want to make sure that it's moving and keeping pace with inflation so that your citizens remains healthy and happy about their wealth status, and then they can focus on their work and setting up businesses and stuff like that, all right? So the economy remains strong, GDP remains strong. And Singapore is very cultured of there's a very strong ownership culture, right? And of course, if majority of the wealth is 75% is in private properties, I also want to make sure that private properties remains very buoyant. I want it to go up in terms of value, but I don't want it to collapse. I don't want it to stagnate. I want to help and make sure that in terms of policy setting wise, I have a strong, stable growth market, but not into a bubble state, right? So basically, I think from a national policy point of view, you can already see that in terms of total transaction volume, 75% is in private property, 25% is in public housing. Naturally speaking, when you look at this, public housing is for stay. Government don't really want too many people to have the mindset that this public housing that will help you to have a lottery effect. But for private housing, it's a bit more flexible because it's for 20% of the people that own property in Singapore, they own private properties, but then out of the 20% of Singaporeans, largely and PRs that own private properties, they have a transaction value of 75%. So basically, just by looking at this, I think the key idea is that the pricing in terms of private property in Singapore will naturally have to remain strong. I don't think our government will allow it to collapse. They want it to grow at a very gradual pace, but they don't want to see a bubble forming, right? Which is why they have all the cooling measures coming in. And in the eyes of an investor, so when we think about this, I think the key functionality is that once you are ready to invest, then get into the market, because you are in Singapore, you are not in other countries where supply is uncontrollable. In other countries, sometimes you buy this property, and then next year there's a new launch right beside your plot. The new launch could be cheaper than your property because the supply is like almost unlimited. And the government in some countries, they don't really control the launches and all that. So I think in Singapore, you are more or less sure that the land is so scarce. It's being controlled by GLS, and en bloc is not cheap as well. So in terms of private properties, I think is generally safe to enter. But on a micro level, because of the fact that I showed you some charts previously that was stagnating, you have to make sure that in terms of entry price, stack facing, entry point, project type, whether this project you can enter or not enter, comparatives of the launch date and all that kind of stuff. There's a lot of mechanics on the ground, and that relates to the investment methodology and research as well. So if you want to have a work with some of our consultants to go through your property investment journey, I think you can, of course, leave us a comment. You can drop me a DM as well and make arrangement for you, and we'll be in touch. All right, so we'll see you on the next episode. Meantime, take care. Yes, right there. Thanks so much. Yes, thank you very much. No, it's for my laptop.